Good morning. So Wednesday, August 24th. Our top story today is an interview with Joo Sang of Pacific Andes talking about the bad rap that company received when Moody's issued some red flag warnings about Chinese companies in a report last month. Joo Sang says that Moody's did not understand his company correctly, and we agree. In fact, you've got to think about Pacific Andes in the context of the seafood industry, and most of the investing world does not understand fishing companies. Pacific Andes is highly integrated. One of their major operations is China Fisheries, which owns vessels and recently has made major investments to introduce vessels and fishing fleets into the South Pacific off of Chile. Their target was jack mackerel. The year after they made this major investment, the jack mackerel stock collapsed, and it's been slowly coming back. So this is a common situation in fisheries that investors don't understand. Stock fluctuations can have a dramatic impact on costs when they're variable, either way up or way down in a particular year. But the fact is that access or control of access to stocks through ownership of vessels, ownership of fishing rights is in fact the key to building wealth in the seafood industry. The lack of such ownership is one of the weaknesses of the Japanese major fishing companies because they don't have their own vessels or direct quota access to some of the best fishing grounds. In Pacific Andes' case, the record is pretty remarkable. Because they are the world's largest producer of fish fillets, and they're also vertically integrated from a catching and vessel-oriented suite of companies through a refrigeration, transport, and warehousing and trading group to a processing group and to a retail wholesale distribution group. Altogether, in their latest FY11 report, the company is reporting annual sales of about $1.4 billion. We think that another thing about Pacific Andes that's been very interesting is the diversification of the company away from China, its original market. When the company first started, much of its sales was concentrated on selling fish into China. That has now changed. Again, looking at its latest report, People's Republic of China makes up only 46% of overall sales revenue. The rest is coming from North America, Europe, and Latin America, and other parts of Asia. This is a very healthy trend and something the company seems to be continuing. So the upshot is this Moody's report raised a lot of red flags about companies in China. We think Pacific Andes got unfairly tagged and agree with the points that Joo Sang is making in this interview that we published from Singapore. In Lexington, Mass., this is John Sackton.